Mornings 8 to 9 on WBNW, 1120 AM and 102.9 FM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
How does your DAV membership benefit you? As a DAV member, in addition to DAV programs and services, members are entitled to a member benefits package, which gives you access to a variety of important programs, products, and services. Also included with your membership is a free subscription to DAV Magazine. For more information, visit davma.org. That's davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one, where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to, is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Mark Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Paul Lane and Mark Fandetti.
Markets continue to rally here after we saw some strong performance on the NASDAQ and S&P 500 yesterday, with both indices rising a collective 1+%. Paul Lane, Mark Fandetti, and Tucker Silva here with you on this Wednesday edition of the Financial Exchange as we dive deeper and deeper into earnings season, where I believe we'll have about 40% of the S&P 500 reporting earnings over the course of the next couple days and into next week. And today we had Tesla's earnings, which we're going to get into in a moment here, but just to set the backdrop on some of the things that have been going on this week, relatively quiet on the economic data front. Really more of the focus this week on our shows is covering the major companies of part of the S&P 500 that are reporting earnings this week. Tesla, I mentioned, reporting earnings after the close yesterday. Then we've got Meta reporting their earnings after the close of the market today. We've got Microsoft and Google reporting earnings. I refuse to call them Alphabet, so we'll always be Google. They were reporting their earnings on Thursday. NVIDIA, which is another big one, they will not report their earnings until next month. But a lot of the behemoths out there reporting their earnings. We've got the S&P 500 up about 6% year to date. And as I mentioned, the market's rallying a bit yesterday with the NASDAQ up 1.5% plus and the S&P 500 up over 1.2%. Some other economic data that we've gotten out recently, we saw Mortgage Bankers Homeowners Association reporting that mortgage rates on the 30-year fixed side of things have risen about 12 basis points to 7.25%. And so, Mark, we'll kind of start the show here. We've seen a little bit of a rally in markets over the last couple of days. I don't think there's really anything significant to attribute to unless...
I want to talk about earnings.
Okay.
Because, just brief, I'm going to talk about earnings for the market as a whole, not individual companies. We'll get into some company commentary, pick on Tesla and all that stuff, I think, shortly. But do earnings matter quarter to quarter for market performance? I asked that somewhat rhetorically, but I have an answer. I've found, others have found this too, and I've redone the analysis recently. They do not. This is surprising to me, but quarter over quarter, I'm not talking year over year or longer periods when earnings almost certainly do matter to equity prices, but quarter over quarter for the market as a whole, they do not. They're not correlated or related in a less or in a more subtle way. Correlation picks up on some types of relationships, not on others. So I'm using that term specifically and for a reason. No detectable relationship quarter over quarter. So while we like talking about it, and while you might be concerned if the company, say, you own doesn't meet expectations and you're maybe a short-term investor, most of us who are invested in equities through a broadly diversified 401k, say, option, don't have to worry too much about it quarter to quarter. Now, if over time earnings growth slows or company size or revenues as a fraction of the economy shrinks as a fraction of the economy, that's a somewhat different story. So I don't want to downplay the importance of earnings over the long term and in aggregate for markets, but quarter to quarter, there's just no evidence that they matter, which I find interesting every time I rerun it and get that result.
Do you feel that's because analysts have a reasonable sense for what the quarter is going to generate in terms of earnings?
I think you just nailed it. Stocks are forward. I should have mentioned this point. I'm glad you brought it up. That was like we rehearsed it. Stocks are forward looking.
Right.
Is the short of it. Yeah, they're anticipating next quarter, the quarter after that. So earnings compiler and estimate a compiler FactSet, a third party, is estimating year over year, 2024 that is, I should say, earnings of about 10%. Mm-hmm. Stocks are already up 6%. So if they go up by more than 10% in 2024, that means multiples, price to earnings have expanded. If they go up by less, that means they've contracted and they're already pretty high. So yeah, the point I'm trying to make, I guess, is that a 6% gain, not even halfway through the year, we were up more than 10% a few weeks ago. Because stocks are forward-looking, I would read that as investors looking ahead to decent economic prospects. Whether or not that plays out remains to be seen. And consequently, good earnings prospects, say, next year and the year after, longer term. But I think you're absolutely right, Paul.
Speaking of a company that did come out with their earnings, and really the focus on the earnings that they reported, this company being Tesla, was not so much the numbers from their Q1. Mark, to your point, a lot of that was already priced in, this idea that they were going to come out with, quite frankly, very dismal numbers in terms of their first quarter data. But what we had here from Elon Musk and Tesla was an opportunity for Elon to speak to what's been very weak performance out of Tesla through the first quarter of the year. The stock has been down 42% year to date, and yesterday evening he had a chance to sort of address many of the concerns that investors have had. The backdrop here with Tesla and the vehicle market in general in the EV space is that there are many more competitors in the space than there were in years prior. And what we saw from Tesla, and this was data that already was reported, but for their Q1 deliveries, they delivered about 386,000 cars. If they annualize that rate of deliveries for 2024, they would come in selling about 1.2 million cars. That sounds all right. However, if you look back at their years prior, in 2023, they sold 1.8 million vehicles, or delivered rather 1.8 million vehicles, and delivered 1.3 million in 2022. So 1.2 is a steep fall off from where they were previously. You also have the global economic backdrop of BYD, the Chinese electric vehicle company, which is probably being heavily subsidized by China, selling more vehicles and offering cheaper options out there. And the reason that Tesla stock is up, I believe, about 14 or 15% today, 14% through the first half hour plus of trading, is because Elon Musk announced that they were going to push forward Tesla, their attempts to produce at a more quickly speed here some of these lower cost mass market models. Tesla currently only has 5 models, but doesn't really play in sort of the cost-effective, lower price space on the EV side of things. So that was one thing that he really pushed, that allegedly, and really important to enforce allegedly with a company like Tesla, promises for deliveries of vehicles or production. In 2025, they will have some of those newer vehicles coming out on the market. And Mark, that along with his pie-in-the-sky promise for robo-taxis really has investors cheering today through this earnings call recap.
Tesla's kind of a so-called meme stock, and meme stock, I think, means something. M-E-M-E, meme stock, I think means M-E-A-N. I'm sorry, this is starting to confuse me. People will drive the price up based on what this guy utters. I can't think of a precedent in recent history other than, say, Steve Jobs, who was much more disciplined. Bill Gates, not even comparable. Bill Gates was just incredibly disciplined. Musk is sort of, I guess you got to give him leeway. I don't know what to think. Part of me says he's a flake, but brilliant in his own domain. But the problem with people who are brilliant in one area is that they think that brilliance is transferable to others. So he comments on cultural and social issues, much of which I agree with, but I also don't necessarily want the CEO of a company I own focused on. I don't know whether to take him seriously, Paul, I guess is what I'm trying to say, and I'm skeptical, like it sounds like you are, of any of reading this as, positive for Tesla's earnings. I don't know what to make of it. Let's see them.
I've been skeptical.
The new products, I mean.
I've been skeptical on Tesla for years now, dating back to 2018, 2019. I just felt that they were consistently overpriced and overvalued relative to what they delivered. What I can argue with is Elon Musk's success from a business perspective, whether it be his influence on PayPal and other ventures out there, and the execution that Tesla has produced. In terms of those sales numbers, if you look at the delivery growth from 2018 to 2023 and the production that they've been able to ramp up, there's no way that you can knock it as much as you may want to shortchange him. They've done a really fantastic job.
He's changed the business.
Executing.
He's a visionary, and he's changed the business.
And he has prompted all of these other competitors to jump into this space because of the success that Tesla has. Now, the reason that they command such a just extraordinary multiple, where I believe their market cap, even after being down 40% year to date, now up 14% today, is $527 billion, is because of the promise that Tesla will deliver more than just being the top EV seller out there. And that's what really Musk leaned on heavily yesterday evening, was this idea that I believe he had a quote here that said, if someone doesn't believe Tesla is going to solve autonomy, then they should not be an investor.
Well, how would you evaluate that statement? I think I know what autonomy is, but I have only a very loose sense of it, and I have no framework for evaluating whether their approach is better than others or even viable. Like, what is that even? How is a retail investor supposed to operationalize, if you like that?
To me, this performance by Musk was to reinforce the support and loyalty of his investors. This conference call here, because nothing that he provided had any specifics behind it, Mark. It was just a lot of, I don't want to say,
sounds like a lot of hot air.
I don't want to say false bravado, because I don't know what's
That's
behind.
Sort of what I'm getting at.
I don't know how they're progressing with robotaxis, and I'm no expert in the space either. However, the one thing I do know is autonomous vehicles is a very cost-intensive, difficult space.
That means self-driving, right?
Self-driving vehicles.
Okay.
And I'll give a quick example to the listeners out there that I'd listened to some Malcolm Gladwell podcast way back where he rode in one of the Waymo cars, which is Google's attempt to be an autonomous vehicle, or their product out there. And think of yourself driving through the busy streets of Boston, for example, or whatever city you want to say. There's a big distinction between a beach ball or a plastic bag rolling across in front of you through the streets. If you're cruising down at 20 or 25 miles an hour, you as the driver know what that is, and if you run it over, there's no damage done and you continue to go along. However, an autonomous vehicle is not going to be able to decipher whether it's a person, which you absolutely need to slam on the brakes for, or if it's just a beach ball or some piece of plastic bag trash. And that is the difficulty with the sensors that they have built in. Now, Tesla doesn't lean as much on sensors and motion and things like that. It's more based on AI. And this is where my knowledge drops off a cliff. I don't know any further than there. But I just point to the fact that it's really hard to do. And it's going to be an absolute logistical nightmare.
No offense, that's a word salad. We don't know what we're talking about. Most people in finance, they got MBAs from impressive schools. They don't know what the hell they're talking. Forgive me.
Yeah.
Can I say that?
Yeah, why the hell not?
They don't know what they're talking about. You couldn't know. It's so easy to be bamboozled when you're faced with a compelling, charismatic expert like Musk, who refuses to show you what's behind the curtain because it's proprietary and knows you don't understand it anyway. There's such a chasm between their level of knowledge and ours that he could tell me anything and I'd believe it. I have no basis for evaluating anything any of these people say about autonomous driving, AI, etc.
We're going to take a break here, but when we come back, we'll do a little bit more Tesla and dive more through some of the earnings reports. That's right after this.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
If you're one of the millions of Americans at or nearing retirement age and you don't have a solid plan, it may be difficult for you to enjoy your retirement years. Hi, this is Chuck Zada from the Armstrong Advisory Group, and I've got some questions for you that may offer some guidance as to whether now is the right time for you to retire. Can you retire? Do you have enough money to live the way you'd like to? Should you retire, or have you exhausted your time in the workforce? Regardless of the answers to these and other questions, our new guide called Preparing for an Upcoming Retirement can provide some insight that may help you make the right decision. Call 800-393-4001 to request your free copy of the guide and get a head start on building your retirement plan. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Coming back from the break here, ahead of the break, we were talking about Tesla and their earnings that just came out from Q1 that were released after market close yesterday. Tesla stock up a whopping 14% today on the heels of that release. And as I mentioned in the prior segment, largely the investor enthusiasm or market enthusiasm is tied to the fact that Elon Musk claimed that they will really ramp up their production of affordable electric vehicles by early 2025. That, along with his optimism about robo-taxis, which they will have an unveiling on August 8th of their robo-taxi, which he nicknamed or threw out there the potential name as Cybercab. You're trying to say something.
No, I wonder if affordability is the issue with EVs. They've gotten a lot more competitive in the past, say, couple of years. Are people more, even if one were, say, equal in price, your typical EV were equal in price to your typical internal combustion engine power plant powered vehicle, whatever the right term is, would you buy it? Or is it more about range anxiety, the fact that most of the charging stations in my area are out of order like every other week? It goes beyond affordability, I guess, is what I'm saying. Does the industry have bigger problems?
It's a great hypothetical to propose whether you would buy, I drive a 2017 Jeep Grand Cherokee and...
Wow, you are part of the carbon emissions problem, my friend.
Definitely am.
We all are.
Whether or not, and when I got that used vehicle, now granted we know inflation has happened, so it's a lot, maybe it was 25, 30 grand, something like that. And it's a lot higher now for something like that. Yeah. But would you line up to pay, let's say it's 35, 40, I think an average vehicle, new vehicle is now 45 grand. Would you pay 45 grand for a lower cost Tesla or your standard?
It's the cheapest Tesla. This is like a Corolla. This is like a Jetta. I'll pick on my car, which I love. This is like a Jetta with an electric power plant. It's not an impressive car.
And to me, the answer is it's the range anxiety and the infrastructure that's much more concerning to me
really
than
the
price. I just think that we've seen sort of a slower than anticipated adoption of electric vehicles as a country in general. Europe and China a little bit better than the United States. But if you look at Ford and GM, some other people who are trying to play in the space, the billions of dollars that they had earmarked to be invested, they've really pared back the amount of spend that they have. And now part of that is just being more fiscally responsible as companies, but there hasn't been as much robust demand. And I think about that story in Chicago earlier this year in the winter where the temperatures were so cold that they were draining the battery on a Tesla. If you don't have a single family home with an appropriate garage that's able to moderate temperature and a charging station built in, it's a tough sell. It's a really tough sell to have a Tesla or an electric vehicle.
And I'll say again, we couldn't possibly know whether Elon is full of it at this stage. He deserves to be taken at his word to an extent because he's done some transformative things.
Absolutely.
And he is indisputably very, very bright. He's also selling something.
The robo-taxi and the cybercab, whatever the heck you want to call it, that's supposed to be unveiled in August, that is really... The next thing is why you'd value the company. I don't agree with the valuation, to be clear, but $528 billion market cap is...
we couldn't know, Paul.
Right.
We couldn't know.
It's predicated on that sort of next innovation.
Maybe it's right.
And maybe
it's folly. Ask me in 5 years.
We'll see. Time will tell. TikTok, we had yesterday the Senate approved a bill that would force a sale or ban of TikTok. It now heads to President Biden's desk where he will likely sign it into law. To be clear, for those avid TikTok users out there, which I don't know if we have a ton on our listener base, but they will still have a year to use the current...
Including in this studio.
Text us at 617-362-1385 if you're a TikTok user out there. But you'd have another year to continue to use the app at that point in time if they had not found a sale. ByteDance, the owner of TikTok, then it would be no longer available likely on your app store, or you couldn't update or download it as an existing app. So it'll be interesting to see 170 million users in the U.S., what the impact is and what ByteDance chooses to do once this gets signed into law by President Biden. We're going to take a break here on the Financial Exchange, but when we come back, we'll have Wall Street Watch and get your estate planning questions ready. Ask Todd is next after this break.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
If you're thinking seriously about retirement, now's the time to build a sound plan that will help you enjoy your later years. This is Mike Armstrong from the Armstrong Advisory Group, and if you're one of the millions of Americans at or nearing retirement age, it's important to understand how to develop this plan, and our new monthly guide may help. In it, we discuss strategies to prepare for an upcoming retirement. We'll walk you through the process of putting together a retirement income strategy, exploring your healthcare options, and managing potential financial risks. There's also the crucial issue of maximizing your Social Security benefits. Call our office today at 800-393-4001 and get your copy of this new free guide, Preparing for an Upcoming Retirement. That number again is 800-393-4001, or you can request it from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in mixed territory as traders assess a busy week of first quarter earnings and ready for tomorrow morning's GDP reading. Right now, the Dow is off by 33 points, mostly flat. S&P 500 edging 5 points higher, and the Nasdaq is up 79 points or 0.5%. Russell 2000 is flat, edging higher. 10-year Treasury yield up by 7 basis points, now at 4.66%. And crude oil down by about 0.5%, trading just below $83 a barrel. Boeing reported ahead of the open this morning and posted a narrower than expected loss and lower cash burn than anticipated for the first quarter. Departing CEO Dave Calhoun also noted the aircraft maker's 737 MAX supply chain is starting to stabilize. Boeing shares up by 2%. Meanwhile, Biogen up by 6% after the biotech company posted better than expected first quarter earnings as the company's cost-cutting efforts took hold and sales of its closely watched Alzheimer's drug came in higher than expected. Texas Instruments jumping by 6% after beating first quarter expectations, while its current quarter outlook came in line with analyst forecasts. Toy maker Mattel reported its sales slipped in the previous quarter as the boom from last year's blockbuster movie Barbie eased. However, its loss was smaller than expected. Mattel shares up by 5%, and after today's closing bell, we'll see big first quarter earnings from Meta and IBM. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
We are now joined by Todd Lutzke from Cushing & Dolan, and he will be taking any of your questions in the estate planning realm. If you have questions on gifting, trusts, estate taxes, call our office line at 888-205-2263. Again, studio line, my apologies, 888-205-2263. Todd, how are we doing today?
I'm never better, and you?
I am doing great. It's a big night for Boston sports. We got the Bruins and the Celtics. Hopefully they both can come home with wins this evening. First question for you, Todd, that I'll take the mic on is, I was speaking with a prospective client the other day who was concerned about his daughter or his son-in-law, daughter's new husband, and he was wondering as to how a trust could provide some protection against perhaps a divorce in the situation of his daughter and son-in-law. He just felt that the son-in-law wasn't the best apple in the bunch and wanted to know kind of how a trust or estate planning could circumvent some of those issues.
Yeah, these are the kind of questions that come up a lot, and I tell people, even when you've done your estate planning, right? So many of you might be listening saying, well, I've already done all my estate planning. I don't really need to, need to revisit it. But I think there's reasons to revisit it. And this may be one of them, right? You may need to revisit them simply because, it's been 10, 15 years. And now I've got grandchildren that I didn't have before that I might want to take care of. Or one of my children, as you say, got married and I'm not too thrilled about the spouse. Or I'm maybe just concerned overall whether the marriage is actually going to last, and you want to make sure that your inheritance that your assets that you leave as an inheritance to your family stays in the family. And these are things to think about in terms of either updating your estate plan if you've already done it, or putting it together for the first time. This should be on your mind. Can you do that? Yes. In terms of leaving assets to children, there's so many ways to do it through the trust. I would say one of the best ways to leave assets to children, whether it's because of a divorce or not, it could be any creditor, quite frankly. You don't have to pick and choose, would be to divide everything. I want to treat my kids equally, so I put it in equal buckets. And then inside those buckets, I have language that says, remember, the trust is now irrevocable because no matter what, the donor is dead. So when the donor is dead, the trust is irrevocable. You could have the kids serve as trustee who manage and invest their shares built into that trust
They can do everything in terms of buying and selling, but they can't take it. So if they can't take it, that means they can't reach in. So let's say Billy can't reach into his bucket and take money out for him or his kids. In order to do that, and I would give them the power, the kids, have the power to appoint an independent trustee, who, by the way, could also remove and replace if you want them to have that power. I think you err on the side of caution and say, listen, I give my kids that power. I want them to have the flexibility. They can then remove and replace the independent trustee. So they appoint an independent trustee. Let's say it's me. I then get to say, they come in and Billy says, look, I'm married. I need money to take my kid go to college or prep school, or we're taking a family vacation, or, I need to buy a family car. It's okay. I get to decide yes or no whether that money comes out. And I have my sole discretion. The reason that's so wonderful is because I have no reason to say no. And of course, if I said no all the time, he'd remove me.
Sure.
And put on another person not related or subordinate to the beneficiaries. And the wonderful thing about it is when the divorce comes and the other side wants half of what's in this trust, they're going to say, that's great, but you have to ask Todd. Oh, I don't love that, because we're going to say no. But it really goes beyond asking Todd, because even though that's a nice power to have, you look deeper and you say, is it owned by Billy? No, this $1 million bucket, this $2 million bucket, whatever it is not owned by Billy, never was. Well, if it never was, then it's not an asset of the marriage to begin with. Doesn't matter that I can say no. It's really not an asset of the marriage. That's the way you would look at it. So great ways of getting it there. And by the way, that ownership transcends generations. So if in fact you have them die happily married, then the asset doesn't go to the spouse. It goes to the grandkids, and it avoids taxation in the estate of the kid. Why? Because the kid doesn't own it. So that's a huge win at the end of the day. And so I think that is something you should think about when you're leaving assets to your family.
A lot of great information there. We're talking here with Todd Lutzke from Cushing & Dolan. If you have any questions in the estate planning realm, whether it be on how to leave assets to a beneficiary through a trust, as Todd was speaking about, if you were concerned about estate taxes or gifting, give us a call at our studio line at 888-205-2263. Again, that studio line number for any of your questions for Todd Lutzke is 888-205-2263. We're going to take a break here, but when we come back, your questions with Todd are up next.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Beneficiary planning and asset protection go hand in hand, and Cushing & Dolan, the experts in elder law and taxation, can help make your planning process smooth and easy. Simply saying you're leaving everything to your kids isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can cost you dearly in the long run. That number again is 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Millions of Americans are preparing for retirement, and if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you two simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits, and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
All right, we are now back with Todd Lutzke, and we're going to go to the phones. Maureen in Wilbraham, Mass., you are on with Todd Lutzke.
Yes, I wanted to know what to do with a safety deposit box. I have a trust. Do I just put that in Schedule A?
So when you say on Schedule A, you mean somebody died already?
No. Well, I guess, that I assume Schedule A is where I list everything that I want to leave to different people. Is that correct?
Oh, you mean on your trust? There's a Schedule A.
Yes.
Ah, this is a great question, Maureen, because people get confused by this. So on our documents, we do provide a Schedule A. However, Schedule A is simply for you to remind yourself. It's a quick reference page that says, I'm going to list everything that I have put in the trust on Schedule A. Because you list it on Schedule A does not mean that it is in the trust. Okay? That's just a reference guide as a reminder for you. So, for example, I do an estate plan for somebody, and we prepare a new deed. And we transfer the deed from, let's say, your name, Maureen, into the Maureen Family Trust. Now that house is in the trust. Now you can list that house addressed on Schedule A. Listing it on Schedule A is not what put it in the trust. The new deed transferring the house to the name of the trust put it in there. Same thing with, like, let's say you've got a bank account or a brokerage account, and it was in Maureen's name. Now it's going to say, Maureen, trustee of the Maureen Family Trust, if you're doing a revocable trust. Now that bank account or that brokerage account is in the trust. Once you do that retitling paperwork, then you can list it on Schedule A as a reference guide. Now, to your point, safety deposit boxes. I've actually not seen a safety deposit box titled to a trust before. I suppose you could do it. Just check with the bank and say, if the safety deposit box is in my name alone, can I just change the name on the account to read, again, Maureen, trustee of the Maureen Family Trust. Now it's in the trust. And then you can list it on Schedule A. But simply listing it on Schedule A alone is not going to mean that it's in the trust. If you leave it in your name, it's a probate asset, and it's going to go through the will. If you put it in the trust, it's going to avoid probate, folks. And that's really the easiest way to avoid probate. Of course, designated beneficiaries or joint accounts could do that as well, but I think there's problems associated with that form of ownership all the way down the line. So hope that helps a little bit. But folks, this is really an important question, because I think a lot of people misunderstand Schedule A, but it also goes towards what our guide is. As we approach the end of the month, folks, how to leave assets to beneficiaries is important, right? And in this case, you might have a stray safety deposit box out there, and I didn't say who I want to get this, but it's more than that. All your assets, right, through the trust, you can direct how they get it. You got a special needs child, how do they get it? I've got new grandchildren that I didn't have before. I want to change my designated benefit. I want to change my trust to leave some to them, right? I want to, as I was asked earlier by Paul, I want to protect assets from the nursing home or from divorces. The trust can be designed to do that. Folks, learn how to leave assets to children, to your family. Trusts live on long after you die. And if you've done your planning, this guide will help you give new ideas for how you might want to leave it. If you haven't done it, then this guide will get you ready when you go meet that lawyer. 866-848-5699 or legalexchangeshow.com. You can download it there. Again, 866-848-5699 or legalexchangeshow.com.
We're going to go to our next caller, John in Grafton. You're on with Todd Lutzke.
Hi, good morning. Todd, you talked about putting assets in a trust to avoid future divorces.
Yes.
What about putting real estate in an LLC to avoid future divorces? Does that work as well?
Well, I very different creditors we're talking about here. So can you do this? Here's how the quick answer is going to be yes, but let me try to fill in some blanks. Putting it in the LLC isn't necessarily what protects it from the divorce, right? Putting a rental property in an LLC, which I totally agree is the way to go to protect you from what kind of creditor? The slip, the fall, the party people who leave drunk and get hurt. I mean, these are the people that you want to protect from, because they're going to sue. If it's not in the LLC, they're going to sue you, John, if you're the owner. They're going to sue you personally, and they're going to go after all of your assets, not just what's in the LLC, and not just the property where they got hurt. So if you put it in an LLC, now when that person falls off the balcony and sues, they are going to sue the owner. Well, who's the owner? The owner is now the LLC. And so if the owner is the LLC, they're not suing John personally, and they're not going after John's assets. So there could be a lot of other assets you have, John, that you would like not to be exposed. This prevents that. And keep umbrella coverage. I'm not telling people to throw it in an LLC and get rid of their homeowner's insurance or get rid of their umbrella insurance, because remember, the creditor does not want the building. They want money. So they're likely now, knowing there's less of a deep pocket, they're going to go after the insurance company, and the insurance company is going to have a lawyer, and they're going to fight it out. And that's what you want, because you want to keep the property. Now, to your point, who's the owner of the LLC? The shareholder. Well, that's you. Well, if you own the stock certificate in your name, right, and you get divorced, that's still an asset of your marriage, right? So that's not helpful. I don't know if you're asking about your own marriage or the kids, which I'll get to in a minute, but that's still your asset, so it would still be subject to the divorce. Now, I would want you to avoid probate, so if you're not the one getting divorced, transfer the shares to your revocable trust. Then when you die, that trust owns that LLC. And that trust, if it's designed the way I talked about the trust earlier in the program when Paul asked, if you design your trust to be equally to the kids with that divorce-proof language in it that we talked about, well then same rules apply, right? So the child gets divorced after you're dead, and they come in and they say, we want that building, we want that rental property. You're going to say, I don't own it. Billy never owned it. The trust owns it. It's not a marital asset to begin with. So the same rules apply. So yes, putting it in an LLC by itself doesn't protect it from future divorces. You need to connect all those dots the way I just took you through in order to get the protection you're looking for.
Todd, thanks so much for the time this week. That concludes our segment with Ask Todd.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutzke has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Markets are in relatively mixed territory as we got the Dow Jones off about 74 points, the S&P 500 relatively flat on the day, and the NASDAQ is up about 1/3%, largely tied to Tesla's rally that we've seen after their earnings call yesterday evening, where Tesla's stock is up about 14% today through trading. Tonight we'll be looking at some other companies, Meta and Microsoft, that will report earnings. That's all the time that we have for the first hour of the Financial Exchange. But stick with us here. A lot to cover on the second hour of the show right after this break.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what are some of the things that can derail a retirement that otherwise would be going fine?
I mean, there's all sorts of items. Certainly, a pension going bust or Social Security getting reduced, people worry about. Certainly, we all worry about market volatility and the risks there, or inflation. But one of the ones that I think people almost intentionally avoid is the risk of increased healthcare costs. I think we're familiar with Medicare costs and things along those lines. But the portion of Americans who will face some sort of heavy end-of-life care and the costs associated with it, it's a big chunk of Americans, and gosh, it's such a taboo issue that we hate talking about and being transparent about. And so you really have to tackle that one and be straightforward with the potential risk.
It seems to me that just doing some stress testing with some actual numbers can make a big difference in determining whether or not that can cause a problem for you.
Yeah, most certainly. But the costs of things like nursing homes or assisted living facilities are so frightening to people and almost unfathomable in terms of total cost that we just choose to stick our head in the sand sometimes. And that's not necessarily the wrong approach to things like market volatility. But when it comes to planning out your future financial success, putting your head in the sand is a losing strategy.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two different ways that you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com. armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Mark Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Paul Lane and Mark Fandetti.
Head into the second hour of the show here. Markets still remain in mixed territory. The Dow Jones off over 100 points and the S&P 500 only off about 8 points or so. The NASDAQ continues to stay in positive territory as Tesla is rallying 14% on the earnings call that they had yesterday evening. I'd like to correct myself that today Meta will report earnings after the close, and then it is Microsoft and Alphabet, Google's parent company, that will report tomorrow after the bell. In the second hour here, Mark, I want to kick off a conversation about interest rates in the Fed, which we spared speaking about for the first hour of the show, but something that is constantly on our minds and economists' minds out there. And this Friday, we will get data on the core PCE inflation, which is the Fed's preferred method of inflation gauge. And I just had a question that I'd like to pose to you. Typically, there aren't tremendous surprises in terms of the number that we see on core PCE. Would any data point that came out potentially influence Fed policy? I know they're always trying to accumulate as much information as possible, but is it something that could have a major impact on their decision making?
Sure, if it's big enough and widespread enough. There are hundreds of components or a couple of hundred of components underneath the hood of CPI, which I think has more than PCE. CPI is the traditional, more conspicuous inflation measure that stands for Consumer Price Index. We talked about that a couple weeks ago last week when it was released. PCE stands for Personal Consumption Expenditure, so it's a different report. As the name kind of suggests, it looks at the increase in things that people actually spend money on. Neither CPI nor PCE is better than the other. They're different. They tend to move together over long periods of time, though historically, I think CPI has been a little bit higher by like a half a percentage point. So it's arguably a monetary policy oriented economist, a monetary economist for short, would say, well, PCE is a better gauge. That's why the Fed looks at it. So to answer your question, Paul, a big jump that's attributable to a widespread rise in underlying components might spook them. I specifically prefer measures that filter out big movements in prices, movements that might be outliers, like big shocks that come from not just energy and food, which are the textbook candidates for shocks, but from other sectors. Sometimes it's cell phone plans falling by a lot. That happened in 2018. The Fed was worried a lot about disinflation. If they had been using the right filter on inflation, they wouldn't have been. So you gotta ignore the big movements from single categories that could just be due to one-offs. I'll just call those shocks. And you want to get at underlying inflation or the trend in inflation. Those basically mean the same. Those two terms basically mean the same thing. That is something the Fed can control. When trend inflation is increasing, it's because the Fed, I'm oversimplifying a little bit, but this captures the gist of it. The Fed has printed too much money, stoked too much demand in excess of the economy's speed limit, if you like, or the capacity of the economy to produce. This happened in the 70s, which was also a decade of big shocks. And it was hard at the time to disentangle the two. So policymakers didn't know if inflation was something they could control or if they were at the mercy of OPEC. It might be happening again now. COVID resulted in a lot of spending, stimulus-driven spending, constrained supply. We all remember the images of containers building up at various ports or cargo container ships waiting for entry into various ports. Classic supply chains snarl up. That distorted the inflation picture. Fed couldn't tell. Arguably, they were too slow on the draw. But they couldn't tell whether inflation was their fault or whether it was one-offs due to an excess of demand. At the same time, supply was constrained. I think we now know, since inflation has persisted for nearly 4 years, it was a little bit of both. So the Fed's job now is to get their short-term interest rate target right. Not so restrictive that it pushes us into recession, but restrictive enough that it creates enough economic drag that inflation slows back to 2%. And we're running by most core or underlying measures, I'll use those terms interchangeably, at least a percentage point above that.
And to your point on the rate side of things, CME futures market assesses probabilities to potential rate hikes at subsequent Fed meetings. For the May meeting here, there's now a 98% chance that nothing is done and rates remain as is. Yeah. It is not until you go out until September of this year where you see a stronger likelihood of 45 or 46% chance that we would see one rate cut. We've talked about on the program before the less likelihood for a interest rate cut heading into an election cycle. And the more you study these upcoming meetings, the more it points to this idea that there is probably very low likelihood that we do see any type of cut absent some really anomaly in terms of economic reports over the next couple months.
I think about this, and it probably took me years for this to sink in to the point where I feel comfortable with all the concepts involved. But if I had to distill it to something we can all relate to, it would be like finding the right cruise control setting on the highway. There are trade-offs. You get there faster, but you use more gas. At some point, you're not going to get there any faster, no matter how much gas you use. At that point, the engine's not overheating, but you're not using your fuel efficiently. The Fed is trying to strike, I don't know if this analogy works, I'll think about it, but now that I'm 3/4 into it, here we go. The Fed is trying to find the right setting. The interest rate is that optimal cruise control setting where the trade-off between fuel expended and whatever your target variable is, maybe it's commute time, maybe it's fuel economy, which is some measure of time to the destination and the amount of fuel you use. The Fed is trying to get that trade-off right. Problem is nobody knows the advantage when you're on the road is these things are all measurable. I can see my fuel economy in real time. I know how long it's taken me to get to work. We don't know what the speed limit of the economy is. We don't, as a consequence, know what the right rate for federal funds is. With all their economist PhDs, the Fed doesn't have any better a read on this than many of us in the private sector using much simpler methods do. So they're guessing. And they're letting the data, as they talk about being data dependent, this is what they mean. They'll know policy's tight enough if the economy starts to slow. They'll know it's not tight enough if economic growth continues to plot ahead, to progress at above trend rates, which it has, and inflation remains elevated. Evidence to this point, I don't think, suggests that the Fed has tightened either enough or long enough. It's one of those two. I'm not saying the Fed has to hike rates,
right?
Because it's not clear to me that we've fully realize the impact of past rate increases. They do take a while to work their way through the system. So is it just a matter of higher for longer or higher than we are today for longer, if that distinction makes sense.
Yeah, there certainly can be a lagged effect on rising rates, particularly when you have so many American people locked in on the mortgage rate side of things at pretty low rates, so they're not feeling it in that capacity.
It's really complicated.
Switching gears a little bit, we just want to hit on one earnings report. We talked about Tesla in the first hour of the show, but Visa also came out with their earnings numbers for their fiscal second quarter. They saw a 17% increase in net income, resulting in $5 billion of net income on the quarter compared to where it was last year. And the reason that this earnings report is, slightly of interest to me, I know, Mark, you always like to look at the economy on kind of a macro level. Visa, though, as it correlates to GDP, which we're going to get a reading on tomorrow, consumer spending does a very good job of tracking the activity that we've seen on that front. And what they saw on the credit card spending side of things is a 6% increase on credit card spending in the U.S. from a year earlier. That's about 40% of their revenue is credit card spending in the U.S. Now, keep in mind with that 6%, let's say inflation's been running at 3 and change or so over the last period of time. So perhaps a real nominal spend increase of about 3%. And they also saw worldwide payment volume climb about 8%. So a very strong earnings report for Visa, continuing to point to the strength of the consumer that we've seen echoed in GDP reports or retail sales data out there. And they also were able to resolve a bitter dispute with antitrust regulators regarding the interchange fees that they are assessing merchants out there. That's how Visa makes its money, is that when you go swipe your card at a gas station or wherever you are spending, they are assessed, the merchant, the gas station, or the restaurant, they are assessed a payment fee based on the transaction volume that ultimately, typically, most of it goes to the bank issuing the card. So JP Morgan, Bank of America, etc., collect a significant portion of that 2% fee. It can be more depending on the card provider. And then Visa takes a small fraction of that. And as a result, Visa and MasterCard dominate the space. There had been a lot of pushback from merchants in terms of the percentage fee that they charge. They've now settled, it's still going through approval, but a better way to sort of regulate the way that Visa and MasterCard set those exchange fees. So that is in their background as well.
Yeah, I just don't know whether to infer that the increase in spending is due to the overall increase. It probably is, like you said, or a consequence of them increasing their market share, more people using Visa.
Right. They are
probably the former, but
they are
I don't know.
They are an absolute behemoth in the space. MasterCard is their rival, but if you look at the size and spend on the two different categories, Visa is really the true dominant player in this space. So it'll be interesting to see, how their data progresses in future quarters. We'll have to keep an eye on that. Visa stock, if we just take a look at their trading throughout the day, I believe they were up in the pre-market. Let's see, only up about 8% today. The stock is up about 5% year to date. We're going to take a quick break here on the Financial Exchange. When we come back, we're going to be talking with Ted Rossman from Bankrate. He is going to be going over summer vacations and the amount of debt that people are going to incur to make sure that they get that nice summer trip in. That's right after this break here on the Financial Exchange.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Millions of Americans are preparing for retirement, and if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you 2 simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits, and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditors. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return. Number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th. At Fort Independence on Castle Island, and registration's now open. Help us support these great American heroes by visiting DAV5K.Boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit DAV5K.Boston. The DAV5K Boston is presented by Veterans Development Corporation.
As promised, we are joined by Ted Rossman from Bankrate to talk a little bit about summer vacations. Ted, thanks so much for joining us.
No problem. Thanks for having me.
Ted, it's that time of year. We're coming up on May, and people are starting to look forward towards their summer vacations in July and August. And you guys did a survey where you were trying to assess, who is planning on going vacation and how are they planning to pay for said vacation. And I think one of the bigger takeaways that you guys found, don't want to put words in your mouth, is that a pretty reasonable amount of people are actually going to finance the vacations through credit card debt. Is that the case?
That's right. Yeah, we found that about a third of people who are planning summer vacations are willing to go into debt for their travels. Credit cards are number one by a pretty wide margin, ahead of things like buy now, pay later services and personal loans and borrowing from friends and family. I always try to be careful when I talk about this because I don't want to tell people they can't have any fun, of course, but I do worry about the high cost of credit card debt. The average interest rate is over 20%. The average credit card balance is over $6,000. I mean, a lot of people are already dealing with challenges here. So my advice would be, don't make it worse by putting a vacation on a credit card and financing that over the long haul. I think there are some other ways to have fun on a budget, hopefully.
You guys reported in this survey, Ted, that 53% of U.S. adults were planning a summer vacation this year. I'd be curious, with the backdrop of inflation or more resilient inflation that we've seen here, as the consumer has kind of continued to be resilient and get out there and spend, how that compares to perhaps last year's data. And I don't know if you have that on your fingertips, but all the feedback we've seemed to receive is that there still is a lot of demand for people in this country to spend on leisure and services. And just wondering your thoughts, or if you had any insights there on that side of things.
There is a lot of demand. Yeah, it surprises me because really 2022 was supposed to be the year of revenge travel, right? As pandemic restrictions eased. And, in many ways, 2022 was a strong year for the travel industry. The surprise was that last year topped it. In fact, the TSA processed about 16.5% more air travelers in 2023 than they did in 22. And this year seems to be ahead of that pace. So,
wow.
It seems like it could be another record year. The only thing I worry about is the debt piece. I understand it's a K-shaped economy, right? Some people are doing better at the same time when others are doing worse, sadly. If you can afford it, go for it. Set the money aside from every paycheck, put together that budget. But if money's a little tighter, look at rewards points and miles as a store of value that could help you afford that trip. Or maybe you plan something, but it's scaled back a little bit. Maybe it's a road trip. Maybe it's driving instead of flying, or maybe it's even a staycation. I mean, I think there are some things you can do to have fun without racking up a big credit card bill.
From a demographic perspective, did you see that one demographic, Gen Z, millennials, or Gen X, that was more likely than to stick with a vacation plan or really whoop it up for a vacation than another?
Millennials stand out a little bit. They're 30% of millennial travelers are planning to take on credit card debt versus about a quarter of Gen Z and Gen X, and only about 1 in 5 boomers. What really stood out was a different recent study we did where we asked about a broader set of discretionary expenses. So it wasn't just travel, it was also dining and concerts and sporting events and things like that. In that study, we found more than half of millennials and Gen Zers were likely to take on debt this year for that kind of discretionary spending. That compared with only 30% of Gen X and only 25% of boomers.
Certainly, it does seem like the millennials and Gen Z more experiential based, and they're willing to levy themselves with some debt in order to do it. That's Ted Rossman from Bankrate. Ted, thanks so much for the time today. Really appreciate it.
Of course. Thank you.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine-in only. Well, on this date in 1979, the state of Georgia designated Ray Charles' rendition of Georgia on My Mind as the state's official song. With its selection, Georgia became the state with one of the best official state songs. The New England states all have songs that really nobody knows except for one, Connecticut. The Nutmeg State's official song was originally sung by British soldiers to mock American soldiers before the Revolutionary War. Trivia question today, what is Connecticut's official state song? Once again, what is Connecticut's official state song? Be the 7th person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 7th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
I really hope that Massachusetts is not Sweet Caroline or something like that.
I'm pretty sure Connecticut's is Billy Joel's Moving Out. No? Is that not?
You're not supposed to give away the answer
No,
to
I'm
trivia.
I'm obviously kidding.
It's not that.
We'll see. We will see. Taking a look around at markets in relatively mixed territory.
Tough crowd this morning.
I don't really get
Or
the
I'm just
reference,
not
honestly.
Funny. Population decrease.
It's a good song.
It's a stretch.
Oh,
It's a stretch.
gotcha.
Moving
Gotcha.
out. Come on.
Stretch.
It is a very good song.
Anthony's song, otherwise known as Anthony's song.
We're going to
Come
take
on,
a break
guys.
here on the Financial Exchange before we fall apart even more, and we'll have the answer to the trivia question right after this break.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one, where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, what is Connecticut's official state song? And that would be Yankee Doodle. It was designated as Connecticut's official state song in 1978. Yankee Doodle was originally sung by British troops to mock the American troops during the French and Indian War. U.S. troops eventually started changing the words to the song and turned it into a patriotic tune. Winner today of the Financial Exchange Show t-shirt was Chris from Norwell, Mass. And Chris is also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
For those wondering what some other state songs may be in the New England area, Massachusetts' official state song is All Hail to Massachusetts, with words and music by Arthur James March. That was done in 1966.
Go ahead, sorry.
And for our listeners up in Portland, Maine, the Maine official song is the Maine Song, which was written in 1937.
Okay, why would British soldiers have been mocking American soldiers during the so-called French and Indian War? We were on the same side, so they were just appalled by the fact that we were just a bunch of provincials, a bunch of rustics, and we thought we could fight alongside them.
Chuck,
I know Ben Kitchen wrote this.
Chuck would know the answer.
Yeah, he probably would. And also, isn't there a verse in there about Uncle Sam?
I don't know.
Isn't it? I'm going through the Yankee Doodle. I didn't know the answer to this question.
Honestly, I've lost interest.
Yeah, well, I mean, you guys brought it up, and then you mocked me for suggesting Billy Joel's moving out for just about any New England state.
It's a stretch.
So I'm digging in. Okay, fine.
Maybe they just didn't
we'll just let AI continue to write these things, and we'll mindlessly regurgitate them.
Yep.
Maybe they just didn't like the cut of the U.S. jib, the American soldiers.
No, I don't doubt that they would have made fun of us because we were a bunch of farmers. I say us, like my family was in Italy doing probably something illegal at the time, but they thought we were a bunch of rubes, bunch of rustics. So it wouldn't surprise me. But okay, I guess.
Boeing is looking for a new executive to head up their company after a disastrous several years in terms of a slew of mechanical and manufacturing slip-ups. The most publicized two fatal crashes of the 737 MAX in 2018 and 2019, and then more recently this year, the 737 MAX 9 on Alaskan Airlines in January, where a door flew off. And certainly it's just been a comedy of errors, really, for the company. They really need to make the right decision here to hire someone that is going to turn around the direction of this company. There has been a lot of stories and a lot of press covered on Boeing and how it's transitioned away from a company that previously had the reputation for ingenuity, engineering, and manufacturing prowess, now to a company that has just really sort of neglected the quality controls in place and really focused a lot more on profit and moving along airplanes, whatever it takes to get those done, and not keeping safety in mind. It seems as if, from a directional standpoint, they will not likely to be hiring someone with inside Boeing because that just has not worked out for them over the past couple hires, as Dave Calhoun is set to step down, or I believe has stepped down, and now
End of this year,
got it. They're now looking at potentially someone like Larry Culp, who heads up GE and was at Danner before, though he claims he's not interested. So certainly it's going to be an important hire from a directional standpoint, Mark.
I wonder what the problem is at Boeing. I mean, we know the symptoms of the problem, but what is the problem? Is it the culture? Is it bad management? Is bad risk management specifically? Or are lower level managers motivated to push stuff through quickly, cut corners? Where is the problem? What is the problem? Excuse me. Again, we know the evidence of it, but we don't know what's going. We can't peel back the layers to sort of diagnose it, the pathology. And can a CEO, is it fixable, or do they need to clean house farther down the organizational chart? I don't know. I'm asking a bunch of rhetorical questions, which probably isn't helpful.
I would say that they clearly need to bring in an outside voice, because many of the people that they've hired have been ingrained in the Boeing culture for years. And that was a strength of Boeing, is that many people were proud to work there and had very long careers there. But Merle Myers, who's a Boeing quality control manager that is part of the effort out here to sort of report some of the flaws that has befallen the company over the years, he really points to the 1997 merger with McDonnell and Douglas, where the shift in corporate culture was much more focused on just getting the plane through, getting it to pass, whatever measly sort of inspection standards that they had in order to get it out there from a profitability standpoint. So, Mark, to answer your question, and not like I am, the next in line for CEO of Boeing, but I do feel as if the company culture
Although
needs
you
to be...
couldn't do any worse.
That's true. That is really true. It needs to be completely reset, where they need to slow down deliveries, which is going to drive stockholders crazy because it's going to further harm their profitability. But they need to be able to rebrand themselves, and that's going to take years, but much more of a focus on quality delivery of airplanes rather than just trying to satisfy a quota. That seems to be really what needs to be done. And as a result of that, maybe with bringing this new CEO, Mark, to your point, you have to cut a lot of old heads out of their positions to replace them with
I would think the new
counsel.
person will do that, yeah.
They would certainly have to. So it'll be interesting to see what happens there.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
The FTC bans non-compete agreements that restrict job switching. Lena Khan, as the chairman of the FTC, has been incredibly active since she's taken over. And this recent ban here, which is set to go into effect in 4 months, however, it is being sued, this law by the U.S. Chamber of Commerce, where the effort here by the FTC is to limit the enforcement of non-competes, that no new ones should be generated and that the ones that exist should only be enforced on senior executives. And Mark, I pose the question to you, your thoughts on non-competes and where they stand in the workplace, because I have mixed feelings on them.
Well, my very non-expert understanding of these is that they're generally not viewed as something a judge would enforce, but those of us who are employees lack the resources to litigate them. So we are sort of compelled to abide by them.
Right.
That's my understanding. People have always said they're not really enforceable, so just go ahead and sign it. Yeah, but you got to have the resources to fight. I guess it's an injunction. that a judge could issue preliminarily. I don't know. This isn't my area. I'm not a lawyer. Anything that impedes, it's anything that prevents somebody from moving. I'll give you the economic interpretation. I'm very comfortable with that. Anything that prevents somebody from moving from one job to another seamlessly will raise the natural level of unemployment. Full stop. In conventional sort of textbook economic models. You could make an alternative economic argument, though, that anything which protects intellectual property will increase investment because firms have an incentive to innovate, invest in their people. They'll have less of an incentive to do that if somebody can take what a firm imbues them with and just move on. What's the net effect of those two things? How does a non-compete affect the balance between those two things? What's your intention? I don't really know. I'm sure some labor economist has done great work on it that I'm just not familiar with.
Yeah, I ran into one situation with my wife and her hairdresser where it's actually pretty common that hairstylists and sales staff and engineers, these are the employees out there that are impacted by non-competes. 1 in 5 workers is tied to a non-compete. And what had happened was her and her mother and sister had started out at a larger hair place that was huge square footage. I'm trying not to give away any details of it, but a massive amount of square footage and many different people at the chair. And what had happened was this particular person that they developed a relationship, broke off and started her own, just renting a chair somewhere else. And they were talking.
Rent a chair. This is a hairstylist industry lingo for
basically set up their own shop where they have just them operating as a sole practitioner.
Oh, I thought you could rent chairs within somebody else's shop.
You could probably do that.
Sort of like an
too.
independent contractor comes in and says, "Hey, you got an empty chair there. I'll rent that and give you a cut."
And she basically, to fast forward this piece there, is that she took all the clientele that her initial place set her up with. So that's how she got her foot in the door, and that's how she got access to all this clientele. Took them with her because they had developed a personal relationship. Now, some could argue the larger place should have taken better care of their employee and paid them more. But on the other end, I sort of do think in my mind, well, they were the ones who allowed her the ability to build this clientele book. Do they have some sort of proprietary claim over it? The long and short of what happened of the story is that they weren't going to litigate someone who was making, not a huge salary, and so it just wasn't worth their time. And I think to your point, Mark, a lot of these non-competes, they just don't even bother to litigate, and they aren't really worth the weight of the paper that they're signed on.
Look, I can see it from both points of view.
Right.
Again, going back to the economics of it, these things increase the so-called natural rate of unemployment because it increases friction, so to speak, in the job market, would be the sort of technical term for it. I don't want to get too wonky here because I don't really know what I'm talking about, but I could see these things increasing unemployment and just being really, I've been under one, you probably have too. Mm-hmm. They're really annoying. Don't tell me who I can go to work for. Make it more welcoming for me to stay if you want me to stay. But from the employer's point of view, they can't afford to make a big investment, which somebody could then sort of run off with and put to use someplace else. I get that. The free market libertarian in me says these things are offensive. I kind of, for what my 2 cents is worth, I kind of bristle at them. Back off, treat your people better, and they'll stay.
We'll see how it plays out in court. We're going to take a break here on the Financial Exchange. When we come back, we'll be doing a little bit of stack roulette. That's right after this break.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network. Beneficiary planning and asset protection go hand in hand, and Cushing & Dolan, the experts in elder law and taxation, can help make your planning process smooth and easy. Simply saying you're leaving everything to your kids isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can cost you dearly in the long run. That number again is 866-848-5699, or you can request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
If you're one of the millions of Americans at or nearing retirement age and you don't have a solid plan, it may be difficult for you to enjoy your retirement years. Hi, this is Chuck Zada from the Armstrong Advisory Group, and I've got some questions for you that may offer some guidance as to whether now is the right time for you to retire. Can you retire? Do you have enough money to live the way you'd like to? Should you retire, or have you exhausted your time in the workforce? Regardless of the answers to these and other questions, our new guide called Preparing for an Upcoming Retirement can provide some insight that may help you make the right decision. Call 800-393-4001 to request your free copy of the guide and get a head start on building your retirement plan. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, time for a little bit of Stack Roulette. And Mark, I will let you bat leadoff.
So gold is soaring this year. There are lots of explanations as to why. I'm not going to speculate about that. You could pick your favorite one. I will speculate and say maybe it's a hedge against resurgent inflation, even though gold's track record outside the 70s as an inflation hedge has been, shall we say, a little bit spotty, a little tarnished, you might even say. Anyway, up 13% this year, gold is. There's an article in Barron's about that, and they give the usual caveats about investing in gold. I would summarize them by pointing out that gold is not generative, unlike stocks, which are claims on future earnings. They tend to participate in economic growth and go up over time. That's not true of gold. Gold, nonetheless, has held its value in varying senses, I guess, over the millennia. So it's more interesting than maybe Bitcoin. Financial advisors quoted in this Barron's article say, don't hold gold at any more than 5% of your portfolio, which sounds about right for a highly speculative, non-generative assets that's subject to booms and busts like any commodity. But this article also points out, which is really why I chose it today, that if you hold gold in an ETF, I did not realize this, and I'm quoting from Barron's, and I'm certainly not a tax advisor, and neither is Barron's, but this is probably true because they've got pretty good editors. Beware the tax implications, says Barron's, of owning gold through an ETF or exchange traded fund, if you hold it for more than a year, gains of shares are taxed at the collectibles rate of 28%,
Right.
not the cap gains rate.
Right.
Okay, you knew this. You're a financial planning professional. I'm not. So it was helpful for me to be reminded of that, and might be helpful to you too if you're considering allocating a little bit of your long-term or short-term sort of speculative fund money to gold. Hold it for more than a year. You're taxed at 28%.
Yeah, if you the other in those groups are
In a taxable account, excuse me, I should
baseball cards and some of the other ones that fall into that collectibles territory, which is different than cap gains from a taxation standpoint.
So you're required to, when you sell your baseball cards to, you go to a shop, you trade them in.
Yep.
I want to trade in my Topps 1985 NBA set, which is apparently worth something. What do they give me, a tax receipt, or do we just sort of shake hands and say have a good day? Because I'd be inclined to do the latter and get the heck out of there.
Certainly not a tax professional.
You
but
wouldn't tell me. I'm not saying, Paul Lane, would you advise me to evade taxes? You would never agree to that.
I would
on air.
I would envision that a Sotheby's, or if you went to auction for a real serious, Michael Jordan rookie card or something like that, they're going to issue one. Is your local card shop going to necessarily print out a 1099 like a casino would? That's anyone's guess. Obviously, it's on you. And there's been similar issues with cryptocurrency too. I think they've been a lot harsher on the regulation of it, but that was a similar scenario where the tax code really hadn't built in a sort of urging of people to, hey, make sure that you're reporting your gains there. So it is important to make
I actually
sure.
don't have the whole Topps 85 set. For some reason, I just bought the Celtics, like a 12-year-old idiot. Instead of Jordan rookie card would have been what, 84, 85? I'm blanking.
84.
Okay,
I would think
that's worth.
But
yeah, again, a year in which I just decided to buy the Celtics and I think the Lakers.
Speaking,
so I've got Bob McAdoo's 84. Card.
Speaking of Jordan, a company that really he helped build from the ground up is Nike, and Nike recently just won the battle for another transcendent star from the women's basketball space, Caitlin Clark, who really became just an absolute phenomenon on the scene over the course of the last several months or so, playing at Iowa and setting all sorts of records in the women's college basketball ranks. They recently signed her, Nike that is, to an 8-year deal worth up to about $28 million. Incredibly significant because the typical endorsement deal with a women's basketball player previously was in the hundreds of thousands, not the millions of dollars. The argument has been for those people in favor of this deal, and there were a lot of shoe companies that were clamoring to sign her, was that she's really going to bring a renewed not renewed because there hasn't been popularity before, but more popularity to the women's game. And they were beaten out. They beat out Puma and Adidas and some of the other competitors in the space. It was interesting, the thought process of whether she goes back to college for another year or goes professional. She has gone professional to the WNBA, but there's almost an argument to be made that she could make more money in college. Now, with the WNBA, she'll be able to have her contract there, which I think is only like $77,000 a year or something like that, plus her endorsement deals. But the endorsement deals in college with all the NIL money had opened up big time too. So it's not as if she wouldn't make any money there. And you can definitely make the assertion that women's college basketball is certainly more popular than its professional version.
Is it even close?
It's not even close, particularly with the ratings that we saw from the Final Four this year. I know for a fact that the WNBA, I don't even know what their contract deals are. I know they're tied in with ESPN a little bit, but they don't pull 14 million viewers to any type of WNBA game. So it'll be interesting to see if she's able to sell shoes. I would imagine on the women's basketball side of things, she's going to be huge to sell to young girls playing basketball. Yeah, she does seem to have that star power that that Jordan once had for the women's game. So it will be really interesting to see how that deal fares out. That's all the time that we have for today's show here, but stick with us and come back tomorrow at 10 a.m. We'll be breaking down GDP and much, much more, some earnings reports as well. Thanks so much for the time.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a